You are listening to Uranium Spotlight, your weekly podcast on the forces shaping the global uranium fuel market, sponsored by PurePoint Uranium Group. Uranium Spotlight isn't just a podcast, it's a platform. Visit uraniumspotlight.com, featuring in-depth market briefings, sector analysis, and the free Uranium Investor Foundation series. Essential reading for understanding today's nuclear fuel landscape. If uranium matters to you, you're in the right place. And now, your host, Chris Frostad.
It's March 17th, 2026, and this week on Uranium Spotlight, the uranium spot market eases slightly. A look into the often overlooked enrichment market and why governments around the world are accelerating nuclear construction. The uranium spot market drifted lower last week. The spot price opened at $86.80 a pound U3O8 and closed Friday at $85.50, down $1.30 on the week. Trading was slow for most of the week as buyers and sellers stepped back to assess broader market conditions. Volatility in global energy markets, driven in part by the conflict in the Middle East, appeared to keep many participants on the sidelines. Uranium supply itself was not directly disrupted, but the uncertainty clearly affected trading behavior. Even in a quieter market, a flurry of buying emerged late in the week. 2 transactions were completed on Thursday, one for 50,000 pounds at Cameco delivery and one for 100,000 pounds at Orano delivery. 4 additional 50,000 pounds transactions followed on Friday, again split between Cameco and Orano delivery points. In total, 6 deals were completed during the week for 350,000 pounds U3O8. What stood out was the pattern. Bids strengthened throughout midweek, but once sellers began hitting those bids late Thursday and Friday, prices softened back to $85.50 by the close. That suggests the market still has interested buyers, but not enough urgency yet to push prices decisively higher. In the term market, activity remained moderate. No major new utility buying programs were reported last week, but one U.S. utility is said to have completed its evaluation of offers for 2031 and 2034 delivery, while another remains in the market seeking up to 1.5 million pounds over the 2031 to 2036 period. For investors, the key takeaway is that even in a softer market, the market still found real buyers when material became available. Spot may be pausing, but utility contracting interest further out the curve continues to point to an underlying supply story that has not gone away. If you want to understand the structural mechanics behind this, the full analysis is found in our Uranium Spotlight briefings at uraniumspotlight.com. We do not talk much about enrichment on this podcast, but it's a critical part of the fuel cycle. After uranium is mined, converted, and prepared for reactor use, it must usually be enriched before it can become finished nuclear fuel. And last year, that part of the market tightened in an important way. In 2025, the enrichment market saw very little short-term or spot activity. Only 7 confirmed spot transactions were reported for the entire year, with total volume falling to just 395,000 SWU, the lowest level in more than a decade. SWU, or separative work units, is simply the standard measure used in the enrichment business. But while short-term activity fell, long-term contracting moved the other way. Utilities signed 24 long-term enrichment contracts covering 36.5 million SWU, the highest annual term volume since 2010, excluding the unusually strong pace seen in 2023. Many of those contracts stretched well into the next decade, and several extended past 2040. That tells us something important. Utilities were not stepping back from enrichment demand. They were stepping away from the thin short-term market and locking in future supply instead. Prices reflected that tightening. The spot enrichment price ended 2025 at a record $200 per SWU, while the long-term enrichment indicator rose steadily through the year and moved higher again at the end of February. The reason is straightforward. Western utilities are still trying to secure non-Russian fuel cycle services, and enrichment capacity outside Russia remains limited. At the same time, governments are trying to rebuild domestic capacity. The U.S. has already committed major funding to support new enrichment projects, but those additions will take time. For investors, this matters because uranium does not move through the fuel cycle in isolation. When enrichment capacity tightens, the utilities become even more focused on securing material and services well in advance. That reinforces the broader theme we keep coming back to. In nuclear fuel, access and timing are becoming just as important as price. Last week's news made one thing very clear. Countries are not just talking about nuclear anymore, they're moving. In Paris, world leaders used the Nuclear Energy Summit to push nuclear power more directly into the center of energy policy. European Commission President Ursula von der Leyen said Europe's move away from nuclear had been a strategic mistake, while French President Emmanuel Macron argued that energy sovereignty and decarbonization will be difficult to achieve without it. That is a notable shift in tone from senior policymakers, especially in Europe, where nuclear policy has often been politically divided. The European Commission also laid out a new strategy aimed at accelerating small modular reactor development with the goal of getting first units operating in the early 2030s. Just as important, the Commission is now talking openly about rebuilding Europe's nuclear supply chain, including enrichment and conversion, not just reactors themselves. France moved beyond rhetoric as well. Macron's government confirmed the financing framework for its first 6 EPR2 reactors, with a final investment decision targeted before the end of 2026. That matters because France is not merely endorsing nuclear in principle. It's putting structure around how to pay for the next wave of large-scale builds. In the UK, the government proposed regulatory reforms intended to speed up nuclear development by simplifying planning rules and reducing barriers that have slowed projects in the past. The UK also granted regulatory justification for the Rolls-Royce SMR design, a meaningful early step for deployment. In the United States, the Department of Energy launched the Uprise initiative last week. Its purpose is to increase nuclear output by uprating existing reactors, restarting dormant plants, and helping move stalled projects forward. That tells you Washington is now looking for practical ways to add nuclear generation on a shorter timeline. South Korea also responded to current energy security concerns by pushing for faster restarts of reactors already in maintenance. With tensions in the Middle East rising, concerns over fuel imports, Seoul is clearly treating nuclear generation as a strategic hedge against fossil fuel disruption. And outside the traditional major nuclear markets, more countries are joining in. India allocated roughly $2.4 billion to support indigenous small modular reactor development. Rwanda said it plans to invest heavily in nuclear as part of its long-term power strategy. Italy is examining options to reintroduce nuclear power. Greece will study the role SMRs could play in future energy mix. Brazil has formed a technical working group to evaluate small reactor deployment. Taken together, this was not just a week of broad pro-nuclear commentary. It was a week of concrete policy movement across multiple jurisdictions, from financing decisions to regulatory reform to reactor restarts to new state-backed development programs. For investors, this matters because uranium demand growth does not arrive all at once. It builds through a series of policy decisions, contract commitments, and project milestones. Last week brought another cluster of those signals, and they all point in the same direction. The nuclear build-out is becoming more real, more global, and more urgent.
You've been listening to Uranium Spotlight, your weekly podcast dedicated to the latest developments shaping the uranium fuel market and its role in the global energy landscape, sponsored by PurePoint Uranium Group. While our passion for the sector is undeniable, nothing discussed here should be considered investment advice. Our mission is to provide a clear, balanced view of the forces influencing uranium prices and the nuclear fuel cycle. For deeper analysis and market briefings, visit uraniumspotlight.com. Join us again next Tuesday for another edition of Uranium Spotlight,